The last quarter was a turning point for production, it seems. What did you fix?
Well, we started production now about 18 months ago. And in the first 12 months, we launched 3 different products: the truck, the SUV, and then a commercial van. And the complexity of launching any product is incredibly high, but to launch 3 products in parallel with a complex supply chain, we really felt that last year. We saw it with shortages of parts, which then led to shortages in terms of what we were planning to produce. But what we saw in Q2 is really the beginnings of the supply chain now really running in a healthy way. I joke that we had a board meeting a few weeks ago, and it's the first time in a board meeting where our supply chain slide had no red on it. So supply chain is healthy, it's keeping up with production. And importantly, is not just what we saw in this quarter, but what's to come. So the continued growth in production output, which is one of the most important levers for us in terms of driving overall profitability.
Your point is that you have visibility on the supply chain, and you see that you have enough parts coming in to get the ramp you're expecting.
Well, visibility of the supply chain, and then really for us running and operating the plant as intended. So there's certainly tons of efficiency improvements that we know that we can make throughout the plant. But we're now at a point where we can be much more predictable to say we believe we're going to produce X number of vehicles this week, this day, this month. And given that the supply chain confidence is there, and given that our operational sort of experience is so much stronger, we're able to have a level of predictability to the business that in the first 12 months we really didn't have.
Some are asking, why didn't you raise guidance then? Because that plant on paper is capable of building many more than 50,000 units.
Yeah, one of the other things we've gone through is just being very much thoughtful in not wanting to overpromise. We want to make sure that we over-deliver on our numbers, over-deliver on our targets, and knowing all the unknowns that still exist in the system. The supply chain is much healthier, but wanting to protect for just some of the unknowns that could happen.
How much did the introduction of the Enduro motor have to do with the ramp in the second quarter?
Yeah, so we have, just as a point of context, we have a quad motor set up in our R1 vehicles. It's 2 motors per axle, so 4 motors per vehicle. And we've just launched a dual motor setup, which leverages a new motor family, which we call the Enduro motor family. And that Enduro is completely built in-house, the rotor, the stator. Of course, just like on the launch configuration, we build the inverter in-house, the gearbox in-house. But when we sourced the power semis for the inverter in Enduro, we sourced in a really thoughtful way that gave us enough capacity and much more confidence around that supply chain than some of the challenges that we've had on the launch configuration. And so that not only provides a high confidence production capacity on the Enduro, but it also provides risk mitigation on any shortcomings in terms of supply on the quad motor.
The other big news of the last 5 days is that you're out of the United States.
Yeah.
A small number of Amazon EDVs, electric delivery vans, are being shipped to Europe, Germany in the first instance.
Yep.
Why was that a significant milestone?
Well, it's important to get those vehicles there. Amazon has a lot of business in Europe, but it also represents not just turning on production of vehicles that get shipped overseas, but all the supporting infrastructure. So we have parts distribution capabilities, we have service capabilities, and the EDV program is really a wonderful way for us to open those markets with highly predictable and planned service intervals and delivery intervals. So it's the beginnings of us opening up the European market for our products.
As you know, I always ask Twitter, what would you ask, in this case, RJ Scaringe? Lots of people want to know about the Amazon relationship. Mm-hmm. You don't break down production by product type, R1T, R1S, or EDV, but a lot of people want a sense of how many vans you're building proportionately to your consumer products. What is the main part of the business?
If you think about over the full year, we've guided to roughly 20% of our production is the commercial vans. As we think about the business going forward, the consumer side of the business will grow disproportionately relative to the commercial side, especially as we bring in our next generation products with the R2 and the R2 platform, representing a significant step up in volume and a much lower price point, much larger addressable market with that product.
What is the status of the relationship with Amazon? They have exclusivity, but you would like to sell vans to others in the future.
I mean, the relationship with Amazon is outstanding. The van is loved by the drivers. There's lots of content all over the web on just the creature comforts we built in, the ease of use, The operators of the vehicles are feeling it, with the increased efficiency. So we've done, I think, a really nice job of capturing that feedback as we went through the development process to make sure the van delivered. We're now in the final hopeful stages of negotiating, allowing us to sell the vehicle outside of the Amazon relationship to others. So that the exclusivity provisions that were originally built into the contract, accelerating when we open that up to be able to sell to non-Amazon.
You are running a business, and you're only delivering around 90% of your production at the moment, 90% of your output. How sustainable is that for Rivian?
Well, that's just an artifact of, long term, of course, production and deliveries are going to be equal. Because we're in a ramp curve, and because our plant is in the middle of the U.S. and a lot of our demand is on the coast, when we build the product, it then has to either get loaded into a train or loaded onto a truck and shipped out. So there's a bit of a delay between the produced numbers and then the delivered numbers. But over time, that becomes de minimis. It becomes a very small difference between production and deliveries.
Would you consider a franchise dealer network or something outside of the current Rivian business plan, or it's just not needed?
No, it's not needed. We really just are, our plant's in Normal, Illinois, and there's just not a lot of demand immediately adjacent to Normal, Illinois. So the activity of moving vehicles to the demand centers is always going to be present, and that doesn't relate to direct or indirect in terms of the sales process.
We talked about enduro and this sort of read-through benefit for power semis. What else are you seeing in supply chain? There's a lot of talk at the moment about metals and what China might do that will impact the metals market. Are you seeing any of that in your discussions with suppliers right now?
Well, probably the most significant that everyone's watching is lithium hydroxide. And when we were planning the vehicle launches, lithium hydroxide was well under $20 a kilogram, and then spiked up to close to $80 a kilogram. It's come back down a lot, which is great news for us. I think it's great news for electrification. So that's probably, I think not just for us, but probably for most manufacturers, been a core focus point just in terms of cost of an EV. But that's not to say we're not paying attention to nickel and some of the other core materials that go into a battery, especially in the context of IRA.
RJ, I want to take a pause in the sort of minutiae of running a car company and ask about you. You turned 40, you founded this company in 2009, you're a founder CEO. Yeah. Are you having fun?
I'm having a lot of fun, yeah.
Are you really, though? It's tough.
It's tough, but it's expectedly tough. I think in starting a business and starting a car company, you don't do that expecting it to be easy. And in some ways, the challenges today are so different than what they were 10 years ago. 10 years ago with a very small team, without enough capital, without a brand that people were excited about. So we're sitting here today, customers are really loving the product. Multiple accolades just around how well received the product has been. The brand's really resonating with customers. We have demand that's beyond what we're able to produce today, which, while frustrating for customers, is a good situation to be in. And then what's coming next in terms of future technology, both in R1 but with R2, is extraordinarily exciting. And I'm a product person, so for someone that's really focused on products, it's always the next thing we're developing that really gets us excited.
Well, one example of that was the decision to join the North American Charging Standard, NACS. How big a decision was that for you personally?
Well, it's interesting. When we made the decision to use CCS1, when we launched
your own network.
Well, when we were developing R1 and planning its launch, that was at the time really the leading solution. Every OEM and the charging networks were sort of consolidating around that. But the NACS charger is of course smaller and takes up less footprint in the vehicle. It's an elegant solution, but we didn't really look at that as an option because it wasn't an open standard. So when Tesla made the decision to open that up, it obviously created some unique opportunities, and we, along with others, were able to not only adopt that as the charging port, but importantly gain access to Tesla's supercharger network, which in parallel to the build out of our Rivian Adventure network provides customers an immediate access starting in 2024 to a very large and very well built network. Now that doesn't take away from the importance of building Rivian Adventure network, as you see new sites are coming online every week, and the ramp up of that network's we're gonna start to really feel that in 2024.
RJ, Wall Street does have some questions. One is about profitability. and the path to get there, and the other is about the need to raise more capital. How are you thinking about both of those issues?
So on profitability, this is like the #1 focus of the business, and you can think of it across a couple of key levers, the most significant of which is production ramp. So you've been to our plant. It's a very large facility. It's designed for a lot of output. When you run a plant like that at low outputs, as we've done really up until fairly recently, just the fixed cost absorption of a facility like that, it's very challenging. So #1 priority across the whole business is production ramp. But close related to that is also working across every aspect of our cost of goods sold. So bill of materials, logistics, inbound logistics, driving quality, and then efficiency of line operations within the plant to drive cost out to get to a point where the business is not only gross margin positive, but supports and carries the OpEx load of the rest of the business. It supports overall profitability.
With that in mind, why did you walk away from the JV with Mercedes in Europe?
Ultimately for us, and we've seen this, and I've talked about this quite a bit since start of production, we've been really methodically looking at what we're doing and where do we drive priority and focus. And there's so many cool, interesting, exciting things to do. We have the deepest respect for the team at Mercedes, but it's so important for us to be hyper-focused on what are the key biggest levers within the business. And for us, it's ramping production of the R1 platform and the EDV platform, and then of course, what goes into the R2 vehicle and platform, which really introduced a step change in volume for us as a business. And that was the decision. We said R2's got to be the core focus for us. We've got to make sure it's executed beautifully, and ultimately that'll give us a big step in overall output for the company.
You are thinking about all aspects of the company and what's to come in the future while handling what's happening now. How is that process for you day to day? You are an engineer by training, I suppose, or origin. You're a founder CEO. Which one is winning at the moment?
Which one is winning? I think being an engineer, I've often said, as a discipline, engineering is learning how to thoughtfully and intentionally solve problems. So solving complex problems, multivariable problems, and actually translates really well to running a business, because effectively, my role is to look across the business, whether it's the commercial side, the go-to-market side of the business, or the engineering side, or the production, supply chain. All different aspects all have different puzzles that need to be figured out. And the nature of the puzzles change with time. They certainly change with scaling. But what it ultimately comes down to is getting the right team of people together that can, at scale, solve lots and lots of different challenges in parallel around scaling, around growing the business. And what we've experienced really over the last 18 months is some pretty significant organizational developments and changes where we brought in additional leaders, we brought in new leaders, and a big part of what I need to make sure in my capacity that I'm driving is that those teams are working effectively together. And of course, working towards one goal, but the how in terms of how we deliver on working towards that one goal needs to be synchronized, so that all the leaders across the business, from my direct reports down, are acting as much as possible in a sort of aligned or unified fashion. And that sounds obvious, but it's actually takes a lot of effort to drive that.
How hard is it to delegate for you? I mean, there are undoubtedly some minutiae of product design or execution that you have an opinion on.
Yeah, I have opinions on a lot of things. So I mean, in the beginning, in the very, very beginning, I had a computer and I was designing parts in CAD. I don't get to do that anymore, but I'm still way into the details around thinking about improvements to the R1 program or platform, but also what's coming in R2. But then making sure that the organization is filled with people that are driving innovation across each layer of what we build as a company. And so that innovation may exist in the sourcing realm, it may exist in the manufacturing realm, or it may exist in the product realm. But all those innovations need to be tightly coordinated, and that's the exercise we've gone through as an organization, growing and learning, looking at R2 relative to R1. There's an extreme emphasis on manufacturing innovation. So the way the body structure is put together, the way the vehicle comes together, thinking about the number of seconds or minutes it takes to put a certain part of the vehicle together, and how the parts naturally want to come together easily. eliminating parts, eliminating joints. These are really key sort of big considerations and drivers we're pushing across the business.
What can you tell me about R2? Here's what I know.
Yeah.
Smaller form factor than R1,
Yep.
S or T. More mass market focus.
Yep.
Different price point, therefore.
Yeah.
It's pretty much the extent of what we know.
That's pretty accurate. I mean, if you think of R1 as the sort of the handshake with the world in terms of what we're doing and how the vehicle's positioned, the essence of it, the feel of it, and we often talk about it both hopefully enabling but also inspiring people to go do the kinds of things you want to take photographs of. That essence we want to translate into a lower price point and into a smaller form factor. But the orientation towards active lifestyle, orientation towards living your adventure, whatever that adventure may be, a trip into the city or a trip to the beach or a trip mountain biking, that percolates across the thousands, I should say, millions of decisions we make in developing it. So how you put bikes on the vehicle, to how you store things in the back of the vehicle, to what it's like to put a pet into the vehicle, to what it's like to drive on or off road. So I'm immensely excited about what's coming because I think it takes a lot of what we did in R1, sweetens it, but then puts it into a package that is really accessible for folks across much lower price points.
Is this exciting for the United States, or are you thinking about other markets globally?
No, it's a global platform. It's sized to fit US, Europe, China really nicely. And I think it takes what we see that's connected so well with the Rivian brand already, which is this idea of enabling and inspiring adventure, as I said, and it just takes it into a price point and a form factor that's so accessible relative to where we are today.
The reason I ask is actually largely about the IRA. If you think about the price point of R1T and R1S, also the component base, the supply chain, it partially qualifies and is excluded from some of the benefits of the IRA.
Yeah.
But do you see momentum from that legislation? When you look at your order book,
For R1, no. R1's largely priced above the price bands in IRA, and the requirements for content, particularly around battery, make it more challenging for IRA. Now,
you don't make your own battery cells, for example, yet.
Yes, we buy cylindrical 2170 cells in the case of R1, from a battery cell supplier, and then integrate them into a module, and then the module into a pack. On R2, the entirety of the program has been set up to make sure that it's IRA compliant. So the sourcing of battery cells, where they're produced, of course being in the United States, how the packs come together, of course in the United States, and then the rest of the vehicle needs to needs to be IRA compliant, because that $7,500 customer-facing credit is really important in a vehicle of this price point. The price range in R2 will range from roughly $40 to $60 in 2023 dollars. So that evolves, but in today's dollars, it's really important that $7,500 credit is built into the price.
You talked about one of the important decisions being supply chain innovation. Does that include de-risking from China in the supply chain? How exposed are you there?
Well, and it's a great question. When I think about how R1 was sourced, we were sourcing most of the components, so things like brakes or seats or steering wheel or windshield, we were sourcing those in like 2018, 2019, so well before we launched the product. And the level of leverage that we had in negotiating pricing, negotiating supply was really limited. And I mean, that manifests in so many ways, but I mean, I really feel it now as we're sourcing R2, the difference in how the suppliers are showing up. In 2018, 2019, we'd be fighting to get a meeting with a head of sales from a major supplier, whereas today I'm meeting one-to-one with the CEOs of these same companies, and we're talking big picture strategy around how we scale together. So just the whole sourcing backdrop that we're developing the R2 supply chain around is starting with so much more strength, and really we think a much better de-risked volume ramp and a much better pricing starting point in terms of the cost of those components.
Claire McDonough and Frank Klein, how do you rank them joining the company in the sort of list of important moves over the last couple of years? So
Claire joined, a bit more than a year, right around, I guess, a year before we went public.
Yes.
Which was great, because she was just phenomenal at helping us to put together everything that it takes to go public as a company, both in terms of the things that are external facing, but also like from an accounting process point of view and an internal process point of view. And then Frank joined a little more than a year ago, and he's been really great in helping us ramp up and scale up our production organization and our manufacturing operations organization.
Would you have been able to do it without them? I guess my question is, since joining, has it been a contributing factor to the kind of change in Rivian fortunes, especially in the last month or so?
Oh, I mean, Claire, Frank, and many others. Rivian can only be as I would say like this. Rivian's success is the aggregate result of lots and lots of people working very hard and working, as I said before, in highly coordinated ways. And that's what makes, I think, the automotive business so unique and so challenging. If you think about a vehicle, it's not even possible for a single person to design an entire vehicle themselves. There's maybe on the order of 10 million decisions that need to be taken in developing something like a car. So if you can make 50 of those a day, it would take a very, very long time if one person were to do it. So you need a team of people that can make many decisions in parallel per day to drive the product to come together. And that's at the development level. You have a supply chain layer on top, a manufacturing layer, and those have to all be integrated. So this isn't like we're designing a coffee cup. It's a really, really complex product with a complex supply chain, and all those pieces have to interconnect really, really thoughtfully.
Claire said something interesting last month, that in the quarter currently, we'll see R1S, the SUV, output overtake that of R1T, and also that the pre-order book is predominantly R1S at this stage. What do those two pieces of data tell you about demand?
Well, first vehicle we started production was the R1T, and up through the end of Q1 of this year, roughly 75% of our production for R1 was R1T, and the demand mix for R1S relative to R1Ts, roughly 75% R1S relative to R1T. So you could think of it as producing a disproportionately large number of R1Ts relative to the demand ratios between T and S. We're now getting that to a point where the production matches demand. So production of R1S relative to R1T should roughly match what of course demand is. And for the next few quarters, we're going to try to catch up a little bit on R1S. We know for any R1S reservation holders out there, we know you're waiting for your vehicles, and there's a lot of frustration with how long the backlog is. So that's something we talk about literally every day, is how do we catch up on the backlog, which is from a business point of view, it's a great thing to have such a large backlog, but from a customer point of view, it's challenging to know you have to wait so long, particularly for an R1S.
How does RJ Scaringe think about marketing? I think about the pre-order book, and lots of people say, well, Rivian's for the early adopters. But I know R2's coming, but in the next immediate term of a couple of years, are we going to see Super Bowl ads from Rivian
Super Bowl, no. Yeah, one of the most powerful voices in building brand awareness and building awareness for the company is actually our customers. So the level of customer satisfaction that we're delivering is extraordinarily high. J.D. Power they do an annual survey of brand satisfaction, and it's independent. So it's not what we say; it's what our customers are saying to J.D. Power as they run this survey. And in our first year with our first product, we came out #1, so ahead of all other brands to have the highest level of customer engagement, customer satisfaction, and with of course the key question of would you buy a Rivian again, being the highest. This is really important for us. So we know that the customers that are experiencing Rivian absolutely love it. They love to talk about it. They get asked questions about it. And we find that flywheel of more Rivians being on the road and more customers talking about their experience with the company, with the products, that really helps seed more and more customers. And we're seeing it, especially as we open up new markets. The R1S is starting to appear a lot more in New York. A lot of eyeballs on those vehicles in New York drives this flywheel of demand. We're seeing it spool up in the tri-state area as a result of that.
We write a lot that Rivian's November 2021 IPO was the 6th biggest in US history, or another way of looking at it, the biggest since Facebook, now known as Meta. And then 2022 was really hard from a stock market perspective. Do you worry about that? How much time do you spend thinking about it? Or your stock's up for a 6th straight day at the time that we're talking, trading at its highest level since February. I mean, do you care?
I mean, The thing about, we went public at a great time. The market was, very, it was a very bullish market. It allowed us to raise a lot of capital. 2022, we know, 2020 was a hard year from a market point of view. It was a hard year for us from a ramp and supply chain point of view. But ultimately, our success in the long term is really going to be determined by how effective we are at building great products that customers love, and of course, doing that profitably. And we do those things well, share price takes care of itself. So organizationally, internally, we of course, are cognizant and aware of what's happening from a share price point of view, but our daily activities, our weekly activities are focused purely on how do we create value for the business, how do we make sure we're delivering amazing customer experiences, and how do we, of course, as I said before, drive towards profitability.
What do you still want to fix at Rivian? What do you think still needs to be fixed in the organization or on the product side?
I think I'd probably look at it slightly different. I'd say at the product level, there's daily changes happening on the vehicle. So every day we have a few updates that go into the vehicle from a hardware point of view. Every few weeks we have a new software release that comes out, so we see the software continue to get better. And that's sort of incrementally, day by day or week by week, improving what the products that we have on the road today. The big next step is delivering on the R2 program.
Yes.
And that's the consolidated, aggregated set of learnings that have been sort of accumulated through the launch and ramp of R1 that'll be baked into R2.
Well, when you and I spoke in April last year, you would make this point that, I get the CEOs from the suppliers in to the factory, and I say, look, here's the factory, what we're capable of doing. How have you taken that experience, as frustrating as it was with R1, to change how you go about sourcing components for R2?
Well, this is a really good point. So when we saw each other, it was relatively early in the ramp. And what we did later in that year, so late 2022, is we brought all of our suppliers to the plant. We had a supplier day. And the purpose of that was to say, okay, 2023, we can't have a situation where we're lying down on a daily basis because of shortage of supply.
In layman's term, you mean the line being paused because you had parts?
The production line stopping because we ran out of a single part. And we had hundreds of our suppliers there, senior leaders, CEOs, senior executives from those suppliers. And I said, I want every one of you to look to your left and look to your right and recognize that the volume that you're going to get from us in terms of demand is based upon how effective all of you collectively are delivering on our asks. And that proved to be a galvanizing moment where getting all of our suppliers together in the room at the same time helped ensure that this year we've really removed those supplier constraints that we felt in 2022. Now, of course, that translates into what we do on R2. And as I said, the whole negotiating backdrop and the level of leverage that we have is so different than what we had in R1 that the health and robustness of the supply chain when we launch R2 will be materially different than what we launched with R1.
What do you want Rivian to be? And I'm thinking about the Amazon van, EDV. A lot of focus on the consumer car in this conversation, but Amazon is also taking delivery of more and more EDVs nationwide, internationally. It's a core part of your business, but you're running 3 product lines at once, and then you want to bring R2 on in a few years' time.
I mean, well, when we think about what we focus on as a business and what we do, everything funnels through sort of one core decision criteria, which is how do we maximize impact? How do we as a business have the most impact on driving what is, you could argue, a once in a many generation shift in transportation from a fossil fuel based transportation energy system to a renewable based energy and transportation system. And somehow, miraculously, like we as a generation happen to be alive right at that inflection point, right at this point of change when 100 years from now, 150 years from now, we're going to look back and say, thankfully, in the 2020s and 2030s, society rapidly moved off of fossil fuels towards electrified vehicles, renewable energy. And so when we think about what we do, we think about how can we drive the most impact within that context. And of course, the EDV program represented for us an opportunity not only for us to add a stabilizing element to our business, but to also open the world's eyes to the need to electrify logistics. And we knew that when Amazon made the commitment to us and we made the commitment to Amazon, that we would be raising the bar for all other last mile logistics providers to say we better electrify as well. So we see impact not just through our own actions, but through the the echo of competition. So we greatly value competition. We think it's actually one of the most important things for this transition. And the same is true in consumer. I remember when I would meet with suppliers to talk about the R1T, they'd say to me, who would ever buy an electric pickup? And I'd, of course, make the pitch to say why we think electrifying the pickup space is important. And that vehicle helped galvanize and shift mindset around the necessity of electrifying pickups. And we now see multiple offerings, each serving customers in a different and unique way. And that's outstanding. That's exactly what we wanted. And then we look at the R2 program and what that represents. We see an opportunity to create truly a beautifully executed product with a vertically integrated electronics and software stack that delivers a customer experience that really we haven't seen in this type of a vehicle, certainly in this type of a form factor and at that price. So again, we hope to raise the bar with what R2 does, and of course we'll inspire competition. That is the point. But continuing to lead through the product innovations, and those product innovations link to, of course, how we drive cost and manufacturing innovation, but that needs to continue to lead the way.
Finished on the word lead, so we'll end there. You're on Twitter and on Instagram, but not as some other electric vehicle company CEOs are. Yeah. What is your plan for yourself in terms of how you communicate? How long you stick around as CEO? It's a well-trodden Silicon Valley story. Yeah. Founder, CEO, some go to become an executive chairman, some go and do something completely different, start a new company. I don't know if anyone's ever asked you that before.
I don't know either. Well, since I was probably about this tall, I wanted to start this company, and it was born out of this sort of deep love of automobiles, which then sort of over time I realized that those things that I loved were causing so many of our world's challenges, from all of our major cities around the planet having air quality issues to, of course, the biggest one being the climate change and the effects of climate change we're experiencing already, to some of the geopolitical challenges we have. And so sort of as I got older, I was inspired to say, let me go work on that big set of challenges. And it's what I sort of think about when I wake up. It's what I think about when I go to sleep. It's what I'm deeply passionate about. So I'm excited to continue driving and growing the business as we continue to work to push the solutions to solve this major shift forward.
RJ Scaringe, Rivian CEO, thank you.